So yesterday I recorded a video in EuroCAD, and I'm going to splice this one, part 2, into the first part using the fancy pants YouTube editor that seems to take forever. But this is just proof that if you look at the video before this, and this is real time, so I'm not making it up, but just because I'm able to put these trend lines on here in such a way that yesterday when I said you would sell the euro versus the CAD at $1.52 just because it's a round number, that you can see here in the last video, it was the end of the day, I said you could have sold there to make 20 pips. Now if you would have held that through this whole drama, and mind you, there's on the 15 minute, there's a bunch of buy sells going on here, that right here at this explicit top at the 20-yard line on close, we have almost a fill. This is why you have to trade within at least a 5-pip window. I can't imagine not buying a 10-pip window. There's no fucking way this thing's going to turn on 1 pip. What I find to be astounding is this Akil Stokes from Empowered Trading would actually do a video where he's selling a course for X dollars, and he's going to tell people, you know, we missed our entry by 3 pips. Fuck that. The spread could 2 pips. How are you showing people to trade so shitty right off the bat? Like, why don't you just tell people, dude, you've got to pepper a zone. You cannot rely on one price. So that's all I'm saying. And some guy here asked me, it's so funny. So people say, are you a profitable trader? It's like, I answered the guy, I said, I'm profitable when I'm winning. So at times you're going to lose. If you're not losing, if you're not losing a lot, you're not betting big enough, because you're going to have to lose a lot to make a lot. So if you're a profitable trader, well, what do you call profit, right? Some people say 10%, some people say 100%. It really depends. If you're going to take from the day you were born, I'm a total loser. So I've done a lot of things, I must say, aren't the best things in the world. I mean, it's just not trading only, but just things where you thought, oh, that sounds like a good idea. Like you read the catalog, you get the brochure, you're like, God, that really does look cool. And I'm almost smart enough to run this fucking thing, and you buy it, and next thing you know, you're like, bored to death, or I really suck at this. And I remember I see this guy's a keyboard player. I remember I had MIDI hooked up. It's my 286 with a Mellotron. It was like a 64-pin interface. It could run 4 channels of MIDI at 60 pulses, 600 pulses per second. You couldn't crash it. People could jam MIDI into this thing on a 286 and not crash it, 4 tracks. And then MIDI, I found out, really wasn't music, and I would get so frustrated trying to hook up this shit that I just grabbed my acoustic guitar and said, I'm just going to play this. So, but unfortunately to trade these days, you got to endure the MIDI of it all, which is this, well, you have to attend to it. Now here you can see on this chart, you had literally 4 chances to sell at $1.52, because that is the exchange window. People come to the exchange and they go to that concert and they leave, right? They go to that show. It's this come and go blues, Allman Brothers, and it's range bound. And you could have made 30 pips on each swing here. But for the trend trader, they're just going to be getting pissed off. They want this to continue, want to continue going up the channel. So I drew these channels on closing time, and I swear to God, I drew these in the other video, and look how this thing just called that out. But that doesn't mean shit. I'll tell you why. Did you come back here every hour and see, oh, it's coming right into my line, I pulled the trigger, but you had to put this stop on it. If you pulled the trigger at the market, you had to put that stop on it. If that's the case, then why don't you just put buy limits at every wick, and when it fills this void, the last slot on the stop highway, so as it's cleaning stops, like this is the first trap, breaks out, people are like, oh man, it's just going to cave in. Well, they're right in the long run. But we got to play the sideways game. Even here, the sideways game. Doji, flat spot. This is like a... yeah, this is a doji. Anytime you see a small bent move, even here, flat, double doji. Forget the body. I'm talking close to the middle. A big, see, this is a screaming shaved candle because it closed right up on the range. So you kind of, it's hard to convert your brain from analog to digital. Like, I look at candlesticks as being digital. They're binary, on and off switch, up, down, whereas this is an analog representation of the wave. That's why people want Elliott wave, right? You know, the Gartley's like a hybrid. The Gartley cracks me up because I'm beginning to think it's something else. I think the Illuminati designed it, and people are going to be subliminally implanted. Every time they make money from that trade, they don't realize what's really happening on the inside of them. So how is this helping you? I could project the whole grid. I could put a Gann grid up here, cue it off of the tops become bottoms on the clock on time. I could also do another variation, is the internal breadth of the market, like another notch down from this steepness. All you have to do is connect these, just 2 points on here. And when you drag this down, you're going to see confluence. Oh, look, it turned here. Oh, look. You see, you could walk it down here. See, top became a bottom at an angle, right? That's all that's happening. But are you able to execute that trade, or do you just want to trade linear? I mean, vertical price-wise, which would be realizing that this is the big window, the big pivot window. Now, here you wouldn't have got filled had you placed a sell limit here for this last rally. Here. Unless you went for the top, become a bottom on wicks. But you know, pretty thin window there. You got to give this thing a 8-pip window. You got to commit to some type of envelope. Always buying new lows works. Now, this is just really tough to think about, because if it's going down here and you're buying, you're wondering why. It's just human nature, because you're... But in order for you to get, it's like jump rope, you have to, there's only a window to jump into that rope. It's constantly, and right now the trade is, you're selling. Right now you have to be a seller, because hopefully you bought at the round number here. You had 2 chances to cash in here and just keep on. And I'm just saying, from a high probability standpoint, look at the double bottom here right at that number. This is a very big deal. And we've completely backfilled. This whole void's backfilled. Mission completed. But these channels do you no good unless you're sitting in front of your screen. None of it does any good unless you can get to your terminal. So the thing is, what time frame are you going to trade on? Now, I'd say the most money you'll ever make is the 15-minute chart. From a standpoint of, you're not quite over trading, 96 bars, 96 tiers, right? 96 tiers on the wall. You got 96 bars a day, 15? Yeah, half hour's 48 bars. Half hour's good. You could sink the half hour, but there's a point at which, if you're looking too close into something, you get lost in the rhythm of that segment. So you have to look at the whole song. And then you're saying, oh, this market's taking a solo here. When you see it do a trend, or you see it does a bridge, right? Like the chorus is the trend. The verses are all the choppiness. the story, all of the character development, and then the chorus is always the same. Things just rips, and it's just very, very high energy, very obvious. You know, like today, that you could see things move, and you just say, "Yeah, looks like nobody's going the other way." There's a hesitation, there's an aha moment, and it's just the void's filling. There's nothing left. A triple top or a double top, it wouldn't matter, because if you can see one top, you already know the next trade. And people say, well, you need to have confluence and confirmation, and it's just, oh God, some guy posted in this thing about when I made a link to this algorithmic trader, this guy is working with this fast computer, and he's trying every variation, right? Trying to just build a mechanical trading system, really. He's using mechanics to find his mechanical trading system. The guy says, oh God, one guy was like, oh yeah, he says he doesn't sound very serious. He sounds like he's been drinking. And I'm like, yeah, because he just realized it doesn't matter. You're not gonna see. And then he was laughing. He said he saw some guy at a bank. And here's what it says about bank trading. It says the guy at the bank, we're looking at a dragon on the screen, and he just laughed and arrogantly said, he says, that's ridiculous. That's just ridiculous. I think he's right. I think it's ridiculous. So, you know, it's like, and I'm saying I'm sell right here because I'm hoping I was long off that. But if you sold here, the next question is, how much do you sell? I would say not too much. Not because, certainly not on a whim. It doesn't mean you can't make money. But here, the problem is, if you sell right now, we could still go up and fill this hole. There's still more to fill. There's all these stops stacking up on the 1 hour. It's still in an uptrend. Is it better to put a buy limit here pending? And you could buy one here. You could sell. You could buy and sell in a hedge. Put stops. Asia's coming, so it's more likely you're going to want to step away from the market and sell in the place where you know the most business will be taking place. So, you know, those booths that you rent to show all your wares and stuff. You show all your stuff, right? You rent this booth. And there's the traffic flow through the those rooms, so the market's moving through these rooms. It's cutting. Here we go. We're going up. So you have to be long here. The bears money management guys are starting to bail here. So if I put a gun to your head, you have to buy right now. The hour will not be up until. You have 40 minutes left in this hour. You missed your entry, is all I'm saying. I would be taking profits along the way. I'd put a sell limit here, one here. So you're trading backwards. And you would just have these, and your first trade needs to be the scalp, right? This is like chess. You can't just move, just because you know how to win chess games, you got to still move your pawns out first. That's your scalp. You can't survive. And actually, those are in your way. The pawns in chess are in your way. Like if you started off with half the amount of pawns, you're like, fuck, man. This is part of the unfolding of the chess game. So you have your scalp out of the gate, then you another scalp, a gun, a pawn, you swap, you get position. By the end of the day, you know, all the scalps at one price level are all already picked over. You know, every bird that's feeding there comes in with a different size beak. And there's a guy that picks up the crumbs, a guy that picks up the last hurrah. You can see all this shit, right? But what do you do about it? You need to place all your orders accordingly, like you're putting out birdseed, because the limits are just like, you're putting meat out there. You're daring the market. And now that's an unhumble position. So fuck this humble shit. Be humble. I'm so pissed off most of the day and irritated by all the bullshit I come across. And what's the worst part about it? The Skype shit I'm on. Holy fuck me. There's some chick, okay, nothing against ugly Asian chicks, but there's an Asian chick on my, I don't know how to get rid of her. I don't even want to Google how to get rid of her. But I cringe every time she comes up. I kind of flinch, and then I have to, and I'm thinking, maybe you should go with it. You know, if I was married to her, I'd be like, okay, she's hot. You know, my buddy, my tequila buddy, we had a breakup. That didn't last long. Our friendship lasted up to the moment he was, oh my God. Now this night, you gotta understand, he's one of these gun nuts. But I think he's a snowflake. He doesn't know it because they took his gun away because he threatened somebody. So he goes, I feel naked. I'm like, yeah, you should have learned a little bit of high karate or something. Some kung fu. Try not to hang yourself. You know. Yeah. I tell you, tequila will definitely change your attitude. But we have to be responsible. And I think that the humbleness is a little bit of a misnomer. I get it. You don't want to be angry all the time because anger's not a strategy, but anger's a strategy kind of like if you have a workaround. So my workaround was, well, I would just do a brinksmanship trade and I would just say, oh, really? You know, just the people in traffic, I dare them. I used to dare people in traffic quite a bit. Because I thought, oh, you're going to tailgate me. Really? Huh? Okay, well, you could do a little closer, please? And then I would just tap my brakes. So, I don't know. But trading's difficult because there's more opportunity than it seems. There's actually a lot of signals. The thing is, people want to filter out what's the best signal. There isn't one. So it's always like, what is your target? If you trade with a 10 to 8 pip stop or a 12 pip stop, say you've got this rule like I only take stuff that has an 8 pip window. Okay, you just narrowed your opportunity because if you're going to trade with a 50 pip stop to make 100 pips, you've got a lot of shit to pick from. And you could actually get in on those in a 20 pip window with, imagine 3 tickets with a 50 pip stop, 20 pip window. At that point right there, in the possibility of course, here's a chess game where all of a sudden, see with the scripts, all of a sudden you've got 16 pieces, 16 pawns instead of 8. As soon as you get 16 pawns, now it's harder to manage in a way, but there's more flexibility in a way. It becomes like anything else, right? I guess when the Russians, back when the Russians were coming to the States, they got pissed off at the store because they said, I don't know what the fuck to buy. There's too much. Like, why don't you just have one brand of everything? One brand of each category, because I'm in the store all day. These people are irritated. So I understand the idea that you're going to have a system, because I stick with my system, I follow my rules. I'm like, oh my God, geez, you put yourself in prison already? Like, well, I thought I'd get locked up for the way I'm thinking anyway, so I thought I would just lock myself up. I don't know, I guess I've never been good at that thing. So, you know, there's nothing I'm doing that's any magic. Like, actually, the person that's well-behaved, probably making more money than me, but I'm not satisfied unless I'm doing something that's logical. If I'm losing because I'm trading too big or I'm over trading, that's completely different. Okay. Knowing how to drive a car and driving and not paying attention to how much gas in it is completely different. Like, you could be a race car driver, not likely that you would. You could be a race car driver and you could be, you know, not paying attention to the fuel, because when you were a race car driver, the guys in the pit paid attention to your fuel. They didn't like look at the gauge and like, let's see, what did I get my last time? Like, so people that trade, if they have money managers or money management robot, like, you know where the market's going, right? Everybody can see. They're like, yeah, it looks like it's going up, but how long is it going to go up right now? And is there a place to get in for a reversal that's logically going to make more money So yeah, anybody can, and I would say obviously over trading is completely different. It's just like over fucking, so to speak, right? I mean, it's one thing to be good at, like, you're doing porno movies, you're a porno star, but you could overdo it, right? And you could you got to sleep, right? And that's the other thing. So if somebody's constantly managing the account, or you just pick windows, and if you're on the 15-minute chart, you're going to get a window that's going to be a lot more applicable for the, like, 3 hours. You've got, 3 trades. You got every hour there's a trade, or every 2 hours there's a trade on a 15-minute chart, like a really decent trade. Because you're going to have to have at least, say, 5 or 8 bars, 10 bars. You only need like 3 bars. Like, actually, I can't do a zoom in here, but I wanted to do the video where you can only see like a couple bars. Here, you can imagine. Here, I'll squeeze it to its, force it into just a few bars. And this is a great exercise if you're afraid to place orders, because this makes it really scary. Like, all you can see is this, right? Like, okay, what's the trade? This is all you can see. If I took off all those lines, well, obviously the trade's going to be for the limit orders. You're just going to put orders in here. You don't know where the fuck that's going to. And look what a genius trade that was to make 20 pips twice. So you made 20 pips there. You could have, see, the ATR is too big here to bracket that with stops. Maybe not for you. 40 pips stops on either side of that. You made 60 pips on that trade. Here, I'm going to delete this shit. In other words, this is probably the best exercise I can think of to really just look at, especially if you're a candlestick trader, because I think there's too much data on people's screens. Like, what if this is all you knew? What would the trade be? You can see how stupid this market is. This is a good price down here. This is Sunday night, actually. This broker has a 7-day-a-week chart. Right. Now you look back here, you're just looking at missed opportunities. We're at top bottom right now, the big structure. Right, this top became a bottom at that round number. But so what? If you're not long now, holding, now this is the thing. Are you going to take your 20 pips and run right now? Did you scalp that and you're like, I just traded fucking 5 standard lots there. I'm fucking good for the day. All right. So if you 20 pips, it's $200. You made $1,000, right? 5 standard lots off that. You made $1,000 in, just right here. Here's $1,000, right? What if you sold minis starting at these double top? Not even the I guess that inner circle trader went underground. He took all his videos down. I guess the Illuminati was on his trail. Sell limits here, minis, and maybe a soft stops like this. So if I sell here, where's my first target going to be? Well, the greedy target's going to be a test of this closing price. And amazingly, this bottom becomes a top in the 1 hour. But does that matter for the guy that has a buy limit at the round number? This actually happened before the top bottom, which means in this short period of time on this thing, the trade plan, believe it or not, it's hard to believe, a buy limit here, and you sell a sell limit here. And this order, this sell limit needs to be placed while the market's down here filling the buy limit. So you can actually just build hedges and get out at the end of the day. You're locking in profit. You don't really have to. In other words, you could build a whole hedge and dump it. So you buy here, you sell here, you buy here. You know, you sell here, buy, sell. Right? You're buying new lows, and you sell here. You could unravel the whole position right now and be up on everything. You know, minus spread commissions. So people don't think like that because they think, well, what's the trend? And I want to be a trend trader when I grow up. Oh boy. But what the fuck? You sell here. The ATR is under 20 pips. You put a sell stop. You're in 2 contracts, scalp contracts like the old days. And you have to let it go. Unless you want to take a high risk entry or sell. Your targets are going to be along the way. So those guys ask me about ratios. It's a spectrum of ratio. There's no one ratio, and it changes every day. It may be better to just trade break evens, high probability. Hopefully, you can put realistic targets on shit. For realistic instruments, the Euro CAD moves 20 pips every 4 hours, 40 pips. And all it's doing is going up and down. Everybody else is putting all these stories on top. It's engulfing. Well, this isn't engulf on the 4 hour because it's 3 hours up, engulfing this. But this is auction, right? We go up here, there's an auction, comes down, trap there, rides up. We sell here, we put a hedge on. What's the next thing? Buy here again. Sell. So you're buying, selling in this range. Now, as it walks down, you're going to buy here, sell here, buy here, sell here. Maybe you sell there, but it's not just one ticket. It's more like buy. And some of these ratios need to be break even or you're never going to get on that. You're never going to see. So that's the Goldilocks factor. You've got to place in enough stuff, diversity to spread your risk, and also have, as the probability goes up, you can take more risk. Stuff that you see so obvious. And when I say risk, I mean I'm saying you moved your stops, because the other risk would just be open an account, just trade it like, you know, just like you didn't care, right? Like dance like nobody's watching. So here you can see sell stops. This is you're in sell zone. Doesn't mean it can't go higher. So maybe you want to bracket that. And maybe you could buy here later on. So this is another problem, is that it may take like 8 hours to get down here just to make money, so you can buy here and then dump here where the floor is. Get in here in a bunch of tickets and then scalp out. Maybe you're going to hold through it. Maybe it's going to cut through north. But typically what's going to happen is this shit. The closing prices are very deceiving because they're very smooth. I've already smoothed it out by just taking a picture of the market every hour. What a big difference between this double bottom and this double bottom. Huge difference. And look, the wick volatility is starting to dry up. Here's a doji. The reason why this doji is better than the candle doji is because the candle doji has to open and close here, where all you have to do here is close in the middle. It's a doji. The fact that it closed down, went up, it could have opened down there and closed up. It'd still be a doji because it's just a range. Here's inverted hammer. But it's really a doji. You're in the middle of the range and you have a small thing, and the fact that it opened there and went up. See, it's stupid. There's the open here, but I'm just on the close on top of candles. Very bizarre effect. Digital meets analog. So as you zoom out, you change what you're like, oh, but look back here and holy fuck, and it's ridiculous, right? Think about it. Look at this. What does that fucking matter, all that shit back there? It doesn't. All that matters is here right now. That's all that matters. Isn't that funny? It's just, I'm easily overwhelmed. So I found the cure was to underwhelm myself with less data, less choices. Yeah, you've got, you know, less is more, right? You can get plenty carried away on just the sizing alone or the how often you're going to pull the trigger. Of course, on the 5-minute chart, imagine this is all you know. Now you can see the spread, so it's pretty brutal. It's 1.5 pips right now. Could you trade this? Well, you buy right now, right? That's the obvious trade. Trend trades pulled back, buy. It's been going down for 15 minutes. You buy. How big do you buy? I wouldn't buy too much, sure. And when you see this thing screaming down, could you buy it every 5 minutes it's plunging? It really depends how far it's plunging, doesn't it? Anyways, that part's the complicated part. I would say, you know, I just love trading. I don't know. I trade a demo. I like to hear that door slam, I think, at MT4. Because that reminds me of when I used to argue with people and I'd get frustrated, I would just bail in the argument. I'd slam the door. I don't know why they put that in there. MT4, there's another, like a mind game. MT4 is playing with me. Making me trade just for that door slam. And then the requote sound, I haven't heard that in a while. It's like a bad game show buzzer. This is a weird broker. This is out of Britain. I'm coming off their server direct. This isn't like with the Asian session. You see all these spreads pulsate. Well, one day of trend line drawing means nothing. Looks pretty. Lines up perfectly on the price. So that mystic view of the market, I get the Gartley thing. You know, it's like a when you buy clothes, the mannequins, symmetrical. The clothing, symmetrical. You take it home, you put it on. You put it on your crooked ass, and next thing you know, it's got creases in it, and you're like, it reminds me of the movie The Jerk. I don't know if you saw that. With very striking scene with Steve Martin gets a drink in the, he finally makes money, he finally makes all the money from his invention, and he's having a drink in a restaurant. And he opens up one of these glossy magazines, and he says, see that guy in the ad with the umbrella in his drink? Bring me that drink. They bring him the drink, and he's like, see, I'm that guy now. And he thought he arrived at that point. I don't know what the point of that story is, but yeah, it's just, you want to be that guy. But yeah, it's never like you think it is. Look at this market, creeper gear. So this is a good buy here for me, right there. So we just stop hunted this. If you had bought every 5 minutes it pulled back, but you have to be thinking every time you trade, you're wrong. I think that's the best mindset, is to approach it not with any, this is another thing. So I asked those guys at Empowered Trading, what the fuck is with this back testing? You know what they said? Positive expectancy. I'm like, dude, that's all I need. Like, if I wasn't over trading before, fucking A, I back tested this bitch. Watch me. So I've done that. That's a big mistake. You should just assume that you're totally wrong. And what's your backup plan? And your backup plan may be the winning trade. If the backup plan is, I might be wrong, let me double up and go the other way, which has always been impossible for me to do because I'm so right. So once I accepted the fact that I could be wrong, Now I'm right in the real world. Like, so market's not the real world. I'm right in the real world as far as the guy in front of me who's swerving. I'm thinking he might be on something, but he could just be an old man. And so the market is really an inkblot test, because you're really tortured to have to think about the truth of the matter is that what's going to happen in the next 5 minutes, you may predict the price in the next 5 minutes, and in 5 hours it may be in the same price. In other words, it may take say an hour to get to 20 pips down, but it may take 8 hours to get 20 pips down. You may be right about the price. You may not be right about the estimated time of arrival, because when the market gets quiet, and it is like a animal that's sleeping, when it wakes up, if you're going to predict the way the animal runs when it gets spooked, that's pretty hard to do, because it could run either way, right? Or it could run a bunch of different directions, but the rate at which it runs, what if it just gets jolted? Now, there was news coming out today, and you could see the markets kind of moving, but it wasn't really big news. The markets had already moved yesterday, and it wasn't because of Trump and all that shit you hear. It was just filling the void. Look at all the holes that got filled. And then they have to make stories in the news to attribute it to that move. So news is bullshit. Fundamental analysis is pure bullshit. If you just trade what's going on, these markets are floating. They're called floating currencies. Just know they just float up and down. And they could go up and down, but where are they going to? They're always going into the void, right? They retrace. That's the high probability trade, is to buy the retest or the retrace. Buying new lows. It's daredevil shit, but is there any other way to do it? No. Because if you buy the breakout, a long-term breakout, a 4-hour breakout, you better not trade, better not bet the ranch there, because you could just be in a trading range. And you just keep banging up and down, up and down. So if 80% of the market's banging up and down, and you know that if it's banging up and down 20 pips, that you're not happy making 20 pips. You want to make 80 pips. So you keep entering that trade thinking, this is the time, no, this is the time, no, this is the time. And by the time you're tired, and the market's not out to get you, you're just tired from managing the opportunity of riding this 80 pip move that you know is coming. Up or down from that congestion zone. So to be able to survive, I think, you have to be the guy that can be flexible as far as how they make their money. Can you dial your system down to so the people that have survived industries are able to say in the music business, right? Can you do, they used to call them jingles, advertising? Can you write a 30-minute song? Can you write a melody that we can use? Or you can write a whole album, like, Who Tommy? Are you going to write a rock opera? If you can write both, you're always going to have business. There'll always be something out there for you. I think that's the thing, because if you can't trade the 5-minute chart, you're like, oh, I know how to trade this, and you got to like really babysit it. Then you can have the swing trades where you're like, oh, I just close the books on that, fuck it. Don't even know what I'm trading. Very hard to do if you're a control freak, but you would take your control freak personality and you'd use that to scalp, because that's really what you need. You need to be like totally engaged. And really, hey, every 15 minutes, every 5 minutes, like right now, you're like, oh, here we go. And then you can see the patterns in the 5. Can we go up here? Is there uncharted water above us? Hell yes. Will it stall out? Will there be sellers coming in at the top of that? Hell yes. So the key is, if you bought on limits here, or you just bought because it's coming back, You got to be thinking about getting out of something right at the previous thing here. People are going to say, well, fuck, I want to make more than that. Look at the spreads, 1.5, 1.3 pips, and I'm really big. My stops here, I'm hardly making. This is the hard part. You have to take something, and maybe you come back with a buy limit here, and maybe you take off half the position, let the rest drift. That's the hard part. The money management stuff, which is pretty much, I don't think there's anything more boring on the planet than money management. It's just math. There's no fancy, like, you're just like, you know. And if you're not lazy, you can just keep on taking profits and just scalping and just going with the way the market is. I don't know if there's any news coming out tomorrow. London's going to open, and then Asia's going to close, and really tomorrow is just like Saturday, you know, in Asia. And so there might be 1 or 2 good bursts left before the end of the week, but there's a lot of just nice, easy, kind of just making a couple bucks here and there, right? This is why people, you know, when I went to this concert when I was a kid, I was amazed. I think we spent like $20 to go see the band, or it was cheap. And then I saw them selling T-shirts for $25 or whatever. And I just thought, why don't they just give these fucking T-shirts away? These guys are millionaires. And then I thought, well, no, every little bit helps, right? They're selling T-shirts. They're selling all this extra, you know, like coffee cups with the band's name on it. They wouldn't be doing it if they didn't think it would enhance. So this guy asked me if I'm profitable. Well, you can always be more profitable. You can always be less profitable. But all that little stuff adds up. So you're scalping here. Your swing accounts are doing well. Yeah, you're doing pretty good. If you're up 20% because you're selling T-shirts at your shitty concerts, and you know, it's like newspapers the same way, right? Why are the Wall Street? I'm in the Starbucks. Wall Street Journal's like $3 fucking bucks. Are you kidding me? There's no advertising in here. Like, why? Why are these magazines have a price? I don't know. Maybe it goes to the guy that delivered the magazine. They're like, well, you just take your cut right here in this part. There's way more advertising, right? So, anyways, you always wonder. So it's really that, it's the way, same thing. And if trading's a business, then it's the same thing, right? You have this ability to extract things on the level that they're presented to you. So not everything's going to be a giant burst where you can make a bunch of money, but there's going to be a lot of chatter, trades sideways, and a lot of things you can do. This guy asked me if I had any videos where I was trading, and yeah, right here, you could have traded that. See how you had to get out of something there? I didn't make it to the target. It's pretty hard to, in a video, you'd have to speed this up. Right here, I'd just be placing buy limits like this. Here, I think I got a hotkey for this. I was running. So how long does that order bank last? I think that's the thing. Different orders on everything here. End of the world stop. Will this make money? Yes. If this lasts enough time for this to come down, doesn't stop you out, bad ratios, and this all it has to do is kind of retrace half of that bank. Now, if I put in, which you really should do, single drops. I have single drops in here, kind of like this. If I put in, say, this bank, like this, I'm going to buy 16 pip range, 5 tickets, 12 pip stop. I'll start right here at this wick. Here's a linear grid of shit. Now I'm going to put in on same ticket, and I'm going to interweave it. This is how I typically trade. Now they could blow this bank out, but this is set and forget it trading, right? If you get this right, now you go deeper. If you don't have a lot of money in the account, you just lay it this. So they blow that bank out, they pick up the other one. It's just a bounce trade. There's nothing wrong with a good old bounce trade off the ceiling or off the floor. You could also write a script that throws in limits just randomly. You could make the ratios better, maybe. But it's better to fill all these tickets in a area than it is to try to. Now, it's going to look very precise. If I went to the daily, you'd say it's kind of a scary trade. You're like, well, I'm just buying new lows here. If you look at this, you're like, well, what's this about? So your perspective of where those orders are changes the way you would feel about it. Like here, you think, yeah, it's kind of like too close to the market. Here, you're like, well, that looks good. Look at it. If it just went down here, there's a bunch of stops down here, or liquidity, what do you call it? Uncharted water. And we've already filled this vacuum here on the top side. So, and if you're a 4-hour trader, you know what you have to do there. This is the big top. Banging up on that. It's not a Fibonacci number up there either. And if you just went long here, for the scalp it makes sense because you're in an uptrend. This is the pullback. But this could just keep on caving in. This happens over and over again where we just keep cutting in. That could go on for the rest of next week. You can picture that. We've seen that a million times. It just keeps cutting in. Now, at that point, are you running sell stops here with buy stops here and just going with the whole cutback? And it can literally melt all. Just look at any chart. Come all the way back here and just keep going. Look at this run. Here's your triangle. Volatility breaks down to a 20 pip window on the 4-hour. Bam. You could have just let that puppy go to each. Hits the round, pauses. Double top on closing of the 4. I feel like one of those guys with the horse race announcer, but auctioneer tone, right? Same story, different day. This is just one currency. They're all doing this shit. The problem is hard to trade a bunch of currencies is everybody's in a different phase. So you're like, what? Wait, what's going on here? And then if you got, now there are some drop orders in here that turn into stops. These are all limits here, but if you go, I have them in here. I think I might have pulled them out of here. Yeah. Oh, well. Yeah, there's no those styles in here. But if you put, or you can just buy here at the market, right? But why wouldn't you just buy it a little bit shallower, say here? Put a 5 pip stop. I'd buy 8 here for an hour. So here's a scalp orientated order. 5 pip stop, good ratio, right? A 5 pip stop to make 10 pips in an hour, 8 pip range. 5 tickets, 5K. And you could stream these all the way to put one down here. If this was a 8-hour, I'd put one down there. You might blow that out. This is why wider the stop, the better the payout. Here's 20 to make 50. Start buying here. But I'm just painting the chart with orders. Always better to go single drop than it is to paint with a broad brush. This is broad brush trading. If you had a bunch of money, see, I could make a dense iceberg here. Just keep piling up in this area, which is pretty ripe for the pickings. Actually, all the way down tonight. If I don't want to, and now the other thing you could do is, as it gets filled, if you're sitting here and you realize that it's going to go up, you can just take profits. In other words, these buy limits are pending, ready to get in. And as soon as you see, oh, you know what? It's it rocketed down, and now it's going to go up. So what did I say in the beginning of this video? I said, well, you'd sell up here, and you'd be short here on stops, this 2 inverted hammers and a 15, and you just would have sold up here and got on all your winnings down here. This could come back, or it could keep going up. But now if you sold, you got to think, it's time to buy it back. This is the problem. You're always buying and selling the smaller the time frame you go. Here's a double bottom on the 5. Pulled back. We just hit more liquidity here. Look at this new low. Even a better entry if you're still holding. But the problem is, if the news came out, I don't know if there's any news here, you're okay, but it could just go like this and just bam, pauses, and then rips up. Now, that could happen. Even here, here at last, look at this. Look at this inverted hammer. Look at this shaved candles right there on the 5. It goes on forever. Okay, so we delete this to go back to the... let's see what else is trading here. See what else we got on board. Here's Australian. Now forget about the chart pattern. Just look at the pips. Now we never made it to the round number there, but if you sell new highs, you're a genius. Double top, you're selling up here. You just don't care. 40 pip pullback. Cash out here. Buy it. Looking for a 20 pip run maybe. I don't know if I'd sell it here. I really like the idea of just buying every 20 pips. That always works. But don't put all your eggs in one basket. You've got your swing trades out here maybe. And maybe you just bought one at the market. That's plenty. You can do a lot of damage that way. Here the new low buy. So you missed this on the Australian 4-hour. On the 1 hour, you can see the trades you missed. Trying to make 20 pips, that is. If you bought here, with the continuous banging on the round number, and it's just so stupid you could just jump out a window. Here's Sunday night, see. Top becomes the bottom. Buy here. This is the best entry. Your buy limit starts right there. Double dip, up. Buy limits here at this bottom. Now here, too tight to stop would have crushed you, but you had to see, this is the top inside this bottom. Carry that forward. This whole window's a buy because it's a hole. This whole window's a sell. And hopefully you're still holding for the 40 pip. Now maybe you didn't. Maybe you cashed. Look at this bounce off the 20, another bounce off the 20. These are not fib handles. These are way better because you can count how many pips you're going to have to risk. Top becomes the bottom right there at the 20-yard line. This is the pivot. 20 pip pivot. Cash at that 20. Look at this wick here. Now look at this very shallow void. This is why you have to fix the scale. It's not fixed here, but stretch this out. Because this is where your sell limits are. And you can see you would have got filled here for just a jumbo ride. Here again. Here we're going up, right? What? You fucked up because you didn't buy here. Same thing on the euro. It's just that they all look the same. I can't tell what currency I'm on. This is pretty scary to sell. You have sell limits to start here and you're getting your ass kicked for straight off for an hour here. It's like, holy shit. Now, if you got in too big there, you're like, that just blew up the account. But if you're trading really big here and then you cash out on half of your position here, look at the top bottom at the 20 dead on 1 hour. And you let the rest go, you cash half the position and you make a nice clean 40 fucking pips. You can see it on the damn grid. Why the fuck are these people using... every time I see that Fibonacci, I just think to myself... I think I said it in the other video. It's like going to hairstyle, haircut. And they got those brochures in the waiting room of all these gorgeous people with fucking amazing haircuts. And you go, I want to look like that guy. And then you come find that when you get home, you don't look shit like that guy. And your hair doesn't quite even manage into that position. And when you wake up the next day with bedhead from all the topical agents on your hair, you're like, Jesus, man, I should just get a hat collection and just really focus on hat wear. I guess that's what people did in the old days. You're like, yeah, get a top hat. You know, really get yourself dialed in psychologically. What other, here, Euro, pound Swiss. More bullshit. Look at this trap trade. Anybody got the balls to put sell limits up here for this capture? Wow. Yeah, you could have just, you'd be out by the time we're back. If you wanted to ride it for another week. But I'm definitely, this was the scalp. I think I said it. I don't know if I said it in the other video, but I said buy this on a dip. Look at that. 80 pips clean off of that today. Look at this fucking thing. 80 pips. At least. Buying new lows. Look at that. So if you started buying here, this is the best trade here. You come in with the right size and you buy every 8 pips, every 5 pips. And every time you buy down here, you realize that your exit door needs to be here. Look at clean. Sell limits. Sell limits here. Tighter stop. Kind of a painful walk down, but you can see that if you're only trying to make the 60 pips, a non-structured exit, it's 60 pips you're trying to make. 20 pip ATR on the 1 hour, you could sell here on a stop or sell at the market. Or maybe you got sell limits at the new highs. See, now how this works is that you would have a triple threat approach, right? What do you do now with your gun in your hand? What do you set a trap for? Like, where do you put the C4 explosives? So here you set the trap for sell limits. Here you just sell at the market like a goof, and here you put the sell stop in. Here you could have done buy stop, sell stop. I don't know if they would have trapped you, but you could have sold into the buy limits here. So this is the best of both worlds. You're short into this. You realize that there'll be a possible fake out hysteria here. And they probably even trapped these people that got, I'm speaking only of the people that sold the, that they're still holding short because they're like, look at that move. Now they're going to drift up. We're starting to get fills on breakout bots and breakout people. And we could just drift up and, you know, obviously everybody's going to be cashing out here at the 20, here at the 20. And just cashing out along the way. And ideally, you're going to be flat. Like, when this thing comes up here, you want to be going flat right into that because there's going to be a pullback and maybe you're scalping back the other way. So this kind of interweaving hedge. So you come down into the other piece and you're going to hand off the ball to the other team, really. In essence, that's the way I'm thinking about it psychologically. But look at this narrow range here before the drama. We get the initial breakout. Breakout traders did very well here if they put their stop here. Now, this is why people would say, yeah, I backtested it and see it works. Okay. But if you didn't get out of by here on this trap, they just went blowing through. And if you gave it extra room with a wider stop, you can see how, right? They would just crushed you. And you couldn't trade one position that way because if you didn't take something on this new low hammer and scalp to the floor and then maybe ride it through, this is like a perfect auction, comes up to this one. So I think the range trading is just, it's like the way to really, pad your account for a possible high volatility or, just bad stuff that can happen. You're over trading or you're putting your orders in too tight or too wide. Never get filled. I did that for 1 week straight. I put all my orders in really wide because I thought, I'm just getting so overcompensated. Put them in super wide at the end of the week. I just never took a trade. And at that point, I was trying to be one of those disciplined traders. So actually I did. I didn't make any money. Didn't lose any money. Best of both worlds. Didn't win, didn't lose. And of course, it made it a little bit boring because, if you like to have some skin in the game, I like when people say I got some skin in the game. I'm like, man, your poor computer. So here, let's see. Look at the 4 hour. Man, what a story. Ouch. Really wish I was short that whole time, but would you really be realistic with yourself? If you were short, I'm going to tell you right now, if you sold up here and it went here and it went there, and then you're like, you didn't get out here. Every time it comes back, you're like, whoa. Not a lot of comebacks there. Here's 4-hour low risk, 20 pip windows. If you're comfortable with a 20 pip stop, here's your windows of entry. Trailing sell stops, even trailing buy stops, no fill really here. Little scalp. So if you're getting in, this is 20 hours in a 20 pip range of bullshit. Nothing's going on. Buy stops are stacking up. Sell stops are stacking. You just go with the flow. And 100 pip target met, 50 pip bounce, almost 100 pip bounce there. Amazing. But it's not so much that, it's this. This void causes this fill, and we go right up to the edge of that, and then comes it's satisfied at that point. Total satisfaction comes back. Look at this thing just crawling away. But see the velocity of this, and look at the look at this stuff here. So you know you're coming into accumulation here, and this is just sell or buy down here was just a gold mine. But who could watch all these currencies simultaneously? My God. Another thing is they're all happening at the same time. The volatility is systemic. If you have all your currencies up at the same time, you just see them all go nuts. It's terrible because you can't take advantage of half what's going on there. Here's the good old British pound. Where's it going? Fucking nowhere. If you're expecting this big move out of the British pound, really? Look at it. Okay, here's one move. So if you really made money here, right here, you're just like, Jesus, look at this nonsense. Oh my God. Oh, look at that. Look at that psychosis. That must have been the news that came out. Look at this. You got a trade plan for that? Sure. Low volatility up here. Sell stops, buy stops in case it keeps going up. Who wins? Sell stops. Who wins buying the cave? 20 pip cave. Underground aquifer there. Classic scalporama back into this and even kind of up a little bit if you held. Another liquidity pool filler. Duh. You got to be on the edge of this thing. This is British pound. Same bullshit, different day. Sell limits. No fib. No moving averages. Just liquidity. You saw this was happening. And the last gasp. Holy shit. Look at selling new highs. Even off of this. Sell this. You kind of little counter trend trade. But even this. If you had the balls to keep, if you had buy limits set up in here, they sweep you in, you add on stops when the volatility comes in. You're short on these limits and you're selling at the market going, oh yeah, now it's a good trade. I love this limit idea where you just have a grid because it gets you involved in a way that the market's taking you in there. You're not saying, oh, I'm waiting for this price action bullshit, or I'm waiting for a move. Fuck your moving averages. Fuck price action. It's price. It's just price. The action is price over time. If it moved 100 pips in 1 hour as opposed to moving 10 pips in an hour, that's just big price action, little price action. What does that even mean, price action? I think it's the dumbest term. I trade mastering price action trading. What would you say if it were a car driver, professional car driving? Well, I'm a master of like moving in the car. Okay. Duh. Well, yeah, mastery of movement program is what I studied to be a race car driver. Not even acceleration. You know, you don't even, these price action people aren't, never use the terms. I'm still looking for the video where a description of velocity, volatility, range, right? velocity and range. They start with a, where does it start with a V? And so, I don't know. I could just complain for hours here, but hopefully you get my point. It's a lot of work to accommodate the market's behavior because it can go sideways for quite a bit of time. But you should have a trade plan for that. You should have a stop plan, a market plan, and a limit plan. I'm just saying because if you have those three ingredients, a stop order forces you to think continuation, trend, confirmation. A market order forces you to think, am I out of my fucking mind? No, what time is it? Is this a good time to buy at the market? And the limit order says, I just shop price. Like when you go on the internet, when I go to eBay to buy stuff, if it wasn't for filter by price, I think I'd die. I'd kill myself. A limit strategy says, I'm going to shop price, I'm going to sell high, I'm going to buy low, and I'm going to put multiple bids out there, not just one, because I don't know really. You're putting probes out there. You're daring the market to even fill you. The stop order is a volatility breakout. Best used, of course. I think the only use because it's really it's very close to a market order. Because if your stop order is 3 pips to 8 pips to 10 pips away, you're saying, okay, I want to get in if we go right now. Other than that, this is the windows disappearing for that thing. Or you could just bracket it with long term. If the market's going to go up or down, like if you want to just force the issue with permanent buy and sell stops, bracketing a 20 pip range, well, hell, you got a 50% chance of being right. If the ratios are good, then you're going to make money. But it's hard to really believe that the market can literally go up, almost straight up and straight down. And then the other day it's going to go straight up and drift down. And the other day it's going to drift up and go straight down. These scenarios are not really something that is easy to I don't want to say bank on or try to, but you have to have those different scenarios are possible. The drift down, you could stop entry that. You could just be, okay, well, I'm not making, the enemy is always going to be the spread, and if you're paying commissions, because this means that if you're not over trading it, but your system's saying, okay, put in the stop, then and you're saying, well, I just, the greedy part of your brain's saying, well, I just want to wait. Maybe if you can wait, you're looking for that big move, 60 pips or 40 pips, that you're just going to save all your bullets for that move. It's hard to tell if the market justifies. That's why I think that the grid lets you filter out just how big, what one man's breakout's another man's trading range. So if you say a breakout is like when it broke out of that 10 pip range, I'm like, dude, it's breakout. I've talked to people that said, breakout of what are you talking about? I go, look at it's moving. They're like, oh my God, man, you poor thing. They're looking for this thing to break out of a 30 pip range. They go, no, that's a breakout, but that's usually a trap too, because that kind of thing, obviously, you could have got in at the market at the top and the bottom of that range and be up on the trade as you approach the breakout of a 30 pip range, because there's a whole life living inside of it. There's a whole bunch of trades inside of a 30 pip range compared to a 10. Because the spread's against you when you get to a 10 pip window. It starts to become progressively against you right the closer you get. So you see brokers with zero spread with commissions because psychologically, wouldn't you rather just fucking buy and be up in that trade and get out and just think, well, I'm paying commissions, but holy shit, I can buy a standard lot for 40 seconds and make money. And the commission's a flat fee, so I don't have to worry about, hey, the market's, the spreads are working against me, and holy shit, as soon as you pull the trigger, the spread gets wide, and you're like, damn. But the price price is going to move anyways, right? Regardless of the spread, the price is, always vibrating at some level, a tenth of a pip. And that matters if you're in super big. Every little bit matters. So the balance point between trading, if you trade too small, then you're just spinning your wheels, so to speak. You're just spending a lot of effort, and you have to gauge. Because if you're good at turning $100 into $500, you should be able to do that in a month, or you should stop trading. Come on, let's be honest, right? Because $100 to $500 psychologically is not that difficult. Taking $1 million to $5 million, that's rugged. Because if you take 100 to 500, you might blow up that $100 once. Now you took 200 and made it into 500. That's still pretty good. Or, 200 into 500 to 700. It depends where you're at in the trading scheme and what you've built. If you only built orders to accommodate a certain pip range, a certain size range, when you go to trade, it'll be a misfit because you haven't found and I guess this is where the math comes in. If you looked at the ATR, and I'm not talking ATR smoothed out 14, I'm talking the weekly ATR is, what is the high and low of the week? This guy in the robot guy said that's a number you can't change. There's no smoothing of that. That's all the market is highs and lows. It's so sad, I know. There's no fucking Gartleys. That's all in your fucking head. Bat wings. When I saw that, I'm just cracking up. And then these people are doing fib ratios of ungodly. I don't know what the fuck these numbers are. Where do they come up with this shit? Couldn't I just throw up on the wall and say, well, I can see what I ate. Look at the pattern in that, right? Yeah, I saw Jesus on a Ritz cracker. Yeah? Did you trade it? I don't know where this stuff comes from, but it's just the mysticism, right? Everybody wants to think that somehow there's a magic number. There's a Da Vinci Code. Holy shit. We don't know if Da Vinci was queuing shit up. Are you kidding me? I'm going to guarantee you could take you could take a child's art. Not that children do bad art, but you could take anything in the universe and cue it. Look, there's a pattern. And your point is, in other words, there's a proportion there. Okay, so even the golden ratio, all this crap, what is it doing for you? It's not telling you how big the trade is. It's not telling you when to trade. It's not telling you what size to trade. So I think that's that. If I had to put it in a nutshell, I'd say how you get in says a lot about what you think about that trade. What type of ticket says a lot about and how far away you are from the market. Of course, market orders, you can write the market, but how far the stops and the limits are away from current price says a lot about, well, the further away a limit is would mean that you're patient enough to wait for that reversal point, because that's the only way that limits are going to make money is on really cleanup is on a complete turn on a dime there. And it could be a flash crash or flash rally that turns on a dime there. Those are the best, right? Because you get paid quicker. And you will get paid. You will make money very quickly sometimes. But analyzing the chart, you can certainly overanalyze that. I'm just looking for the voids. I mean, it just looks to me like you have to almost forget. It's not about the price. It's about the price around the price. I mean, it's the unpriced areas of the chart that have yet to be priced. So how will that fill? Will it be a smash and grab? Will it be an ATM raid? Or will it be a drift down, quick up? There's only, six possibilities there? And does that matter? Like, what if it doesn't unfold like that? A lot of times you would say, well, look at this drift down. It's just going to smash up. maybe it drifts up. And you're just trading this one currency, and you guess like, oh man, just wow, this is something else. But it's not something. This is when you start to find other ways to make money, because if you just have this one signal, then I saw one of these IML guys. I was almost going to go to this meeting and they had in town this iMarkets Live. And I saw the guy had his auto trader. He was copying trades from a guy, I think, that was scalping his ass off. But it was so hilarious because there's no fucking stops on this account. And a couple times there was a take profit even. But he's just getting out. He's trading 44K. He's trading 10, 13, some odd lots. And then he's just getting out with whatever he can grab. Total scalper, this auto trader. He was following some guy. Now, I know people will see that and think, well, that's it. Just sign up for that shit and just follow the winning trader. But everybody has a losing streak, because if they aren't totally full spectrum trading they have like Sybil, right? You have to have almost multiple personality disorder to take care of all those different kinds of styles, because you're never going to be, if you're a trend trader and you can endure all the fluctuations, because really you're kind of a swing trader too, because swing trader has to endure a possible triple retest, then can you change your personality to kind of like stretch yourself? They used to call them stretch goals, I think. Not just, just goals, right? Stretch goals, I think, is trying to do yoga. Yeah, that's a stretch goal. I tried yoga. It's okay until the teacher came up and started rubbing this like mint ointment on me, which I really didn't request. Thought that was odd. Of course, we're in a room with a fireplace. It was just hot yoga. I was like, okay, well, I'm not going to be able to trade on my tablet in here because I might miss sweat dripping off my head. I'm buying at the market from the drops of sweat hitting the tablet. That's an experience. When people hug you, do you ever wonder, like, how do if you're not, I guess, socially seasoned, every time somebody hugged you, you'd think, oh, they must really like me. Next thing you know, you're calling them like, what are you doing later? They go, what are you talking about? I met you at that party and you hugged me. Oh, I just do that. I just hug everybody. Oh, so it's going to be like that, huh? But, yeah, the market can betray you like that too, where, oh God, that MACD is so gorgeous, and you just get stomped out on some wicked spike. And of course, this positive expectation, positive expectancy, we're expecting twins. I'm seriously, man, I know it sounds good up front, and bless their heart, they're all selling those courses, but I do think it's to set you up for failure kind of thing. So, or these people that, I guess supposedly they raise kids now and they say, oh, everything you do is so good, you're so smart. Well, my parents always said that. They say you're not like the other kids, you're a little, they left-handed compliments, right? Yeah, you're unique, you're different. But so everybody's their own, like snowflake, their own special design. And I guarantee you, some people will never be comfortable jumping out of a window. And people jump out of perfectly good airplanes, and they charge for that. I always think that's really risky, like hot air balloon. Very risky. Forex trading, not really. Okay, maybe you lost some money, but I still got my, fingers and toes. And so some people go, they want to go swim with the sharks. They want to go do that gig. But maybe those people are better traders because they're like, hell, this is nothing compared to climbing a mountain. And that's the So, you know, the market's just a pile of money in there. It's really hard to, you have to look at it this way. The market's constantly has a lot of opportunity there, but I don't know how to say, how would you almost have to just accept the fact that it's not a consistent way to make money. Making X amount of dollars a week or something like that, or see if you give yourself a whole month, then you can recover from whatever. Like if the market stopped you out because you were in too big and your stops were too tight, and they just stopped you out, and you're like, oh, you didn't get back on board for what you knew to be a. Whenever time you see the market move really quickly, it probably not going to last. But when it moves really quickly, really bigly, it is really hard because you have to either wait for it to run out of energy. The other option is to make money as it's rocketing. Very tough unless you can say, okay, I can see we're still filling a void here. Let's go. Let's just take something. And then you're dancing with the market, and the market is literally having a unique move that it's never done before. At a velocity and just a crushing, it just keeps going. And you think, isn't it done yet? But if you look left, you typically see the gulf that it's filling. It's engulfing the gulf. It's engulfing fresh, uncharted water. Not only, and it's engulfing the whole week candle. So it's and it's kind of healing itself, right? Because apparently that was an unfair price, or that price was out of bounds. So it's coming back to fair value and coming back to sanity in some regard. But I don't know if that helps. It's definitely difficult because if you have a fixed pip size, a fixed pip stop, and a fixed size you're trading, it's very, very difficult to trade. So consider that as to be a starting point. Try it on a demo, trading with a fixed, trade a mini. Scalp a mini with a 10 pip stop to make 20 pips, and just go with a hard plan like that. Difficult because those windows are strictly dictated. You have an inflexible size, and you have an inflexible stop. If you're going to trade a mini with a 10 pip stop, now you could trade a 1K with a 100 pip stop. That spectrum from 10K to 1K, right in there, is plenty of resolution to have the most that right there is complex. If you traded 1K to 4K, that's 4 times. If you have a 13 stop, a 15, 2 pips away stops, a whole bank of those tickets ready to drop, all the way up to say a 20 pip, and a spectrum of 1 to 4K on each of those tickets, you've got so many it won't fit on your buy and sell versions of that. So all those ready to go orders, but this is nothing more than, like I said, if you had a pizzeria, it's like, what do you want? Cheese? How many items do you want? People are going to want different. You can't have a fixed pizza. We just do medium pizzas with pepperoni. Yeah, you probably could if you sell by the slice, right? So you're just this guy scalping. You can't take that big order. You can't put, I think they call it the garbage can pizza. Still call that with every fucking item. Stuff they find on the floor. And, you have that large, so big you can't pick up the slices. They're bending. That's the big giant trade. Like, that's the big trade. And the guy that sells that pizza probably makes more money than, because his oven only goes up, like your oven's already going. So what you put in the oven, it better be a big ticket item. Not better be, but you want it to be, because you're paying for the oven to be on. If it's just doing little personal pan pizzas, I guess you got to have those marked up enough to make it worth its while to go in that oven. You can put more of those in the oven. And that's the thing. You can put more single orders in it because there's really no limit on a lot of these brokers. You put more single orders in there. But it's more work to do a bunch of personal pan pizzas. But maybe you got more customers. And maybe you're getting exposure for free. You get free advertising because people are like, yeah, they got these little personal pan pizzas and they got this thing if you're fucking just a complete slob pig. And they've got the whole spectrum. And that's my point. That's what I want to say. I just started there. But I'm saying you need a spectrum, you need high resolution, and you need this a deep spectrum. You need, and this make it easier to accommodate stuff because you're like, oh, we got something for that. Like, just if you were like, I'm amazed when you go to the store and you see how these colors of paint they have, and then they come up with these bizarre names, right? But how many shades of paint? I'm like, fuck. I mean, I looked at that one day. I said, God, can we just go for like a range here? And then of course the samples they give you are nothing like the whole fucking wall done in that color. It's completely different. You're gonna tell me a little paint chip like that? A whole wall of that? You're like, Jesus, let's fucking paint over that. Like, it just blow your brains out. Plus, it's gonna come in at a different wet. It's gonna be a different finish. It's gonna be slightly different than the chip. And wait till the light in your room hits it, and all the shit you got in your room is colored. So if all your furniture is a certain color, it's going to reflect off your furniture, and it's going to amplify the color on the wall. Just like the shit on these charts. And if you change the color in your chart, you psychologically change the way you're going to trade just a little bit. You're really at the mercy of psychology. So if I trade with these candlesticks, I'm like, holy shit. I mean, that was tough. I go back to the days where it was a bar chart. That's all we had in the 80s. We had bar charts. There's no such thing as candlestick charts on any magazine, in any software that I ever saw. I can't. Maybe it was around the year in the 90s. I think you started to see candlesticks show up in charting. Really, to the detriment of mankind. Makes cloud trading look easy. But I don't know if that helps. It's certainly a deep topic, and the starting point is psychological, in my opinion, is to just trade a 1K and just put in a 50 pip stop to make 50 pips and just pick spots for that and just say, I can get out and take 20 pips. There's nothing wrong with just experimenting. This is the only way you're going to connect to what scares the shit out of you and what pisses you off and what makes you happy. And you have to listen to Sheryl Crow while you're trading, right? If it makes you happy, but your account got blown up. But I still felt good about the trade. Hey, it was a good trade. I did what I was supposed to do. I was down, I was buying. I don't know where the money's at. The pattern's so fine. Tell me where the money went. So, I don't know. It's but I can tell you that most of what you'd see on the internet, I always ask. I was freaked out about these long things people talk about, and they show you their trade. They never show you their trades hardly. A couple people do. There's a guy out there I didn't get to trading a 20 standard lots on one ticket there. ICT disabled guy. Interesting trade. A bunch of places he could have got out. If you're flexible enough with, if you're going to trade $20 million one ticket, that's 20 standard lots on one ticket, you're going to, you're really going to focus, right? $2 million position, right? 20 standard lots, $2 million of currency. But with leverage, it's only going to cost you $4,000 to hold that at 501 leverage. So you need $4,000 in your account, at least. At least $10,000 in there, and you're going to be risking about 40% of your account. If your stop is that, the guy's stop was like $3,500. So there's a big difference between that. And when these guys at Power Trading, they just never talk about it. They don't say stuff like, well, imagine you're at half a standard lot here. Let's do the math on the Dow risk, because I think that's, I don't know if they're not legally allowed to say that, but isn't that what's going to really matter? Like if you're going to risk $100 to make $300, people are like, I can almost say there's got to be a comfort zone there. What if I said we risk $28 to make $40? Would you be up for that trade? They're like, well, if it's that good, can't we just risk? Well, sure you could, but if you trade small on each ticket, when you go to the next trade, it's going to be a different outcome if you're going to pick a different entry price. So you can tell the total risk to ruin and the total profit if every ticket played out, but you cannot tell what the better trade plan is, because it's all happening in a composite manner in your account. So, but I wouldn't worry about that. If you're making money, you're making money. If you do too much examination, the problem is this is a money-making business, but so is selling cars. But when the bean counters come in and they count too much, you know what they do? Just like people that put too tight a stop in, these idiot bean counters come in and they wipe out products that may not be making a lot of money, but they're the reason why you even got customers in the first fucking place. That's how stupid businesses are. And don't get me started on these car designs. Every car looks the same now. People are scared shitless to have a couple of people out there, the cube car, right? But you can't be afraid of having your own custom trading system. I'm just trying to rattle people's cages that have just figured that, well, this guy here, and it makes sense, right? This guy's successful. If I do what he's doing, I'll be successful. I guess so. I mean, when I play guitar, I want to play guitar like, do I want to play guitar in a style that somebody's doing, or do I want to be good at executing playing guitar? Can I do it without the frets buzzing? Or am I trying to pull off, if I try to play like Stevie Ray Vaughan, if I try to play like Hendrix, I get all Hendrix's foot switches, and I have good execution, I sound just like Hendrix. It's kind of odd. Stalker thing to do is totally adopt some style and be like, oh yeah, well, you know, I understand, like the Elvis, right? He's doing Elvis, and that's like you're taking on that trade plan, and you're good at it, right? Could you make more money being Elvis and being Frank Sinatra in one night? You come back and you put on another outfit, and he turns from this. You got to see this guy, right? He turns from Elvis into Sinatra. Holy fuck, same guy. You can't believe it. Now you're going to be double booked. You're going to make a lot of money doing that, because you're going to be filling two different angles in the entertainment world. You're going to clean up. So, anyways, that's diversification in entry, in size, in instrument. Don't limit diversification, which creates stability. Don't limit that just to, oh, we trade stocks and bonds and a little bit of everything. But it's a modern world. We got computers. Everybody should be able to make money trading. I think, like I said, over trading can kill you, even if you're right about the trade, and oversizing could kill you, even if you're right about the trade, and undersizing can make you just think, why am I doing this? I'm really not making any money, and it's not even fun. There's no excitement. I suppose it's okay to find it exciting to trade and make money. I don't think there's anything really wrong with that. People say, well, of course, you don't. The only downside there is if you're really excited about winning, you're going to blow your brains out when you lose. But yeah, the markets are very fickle, erratic, and all those things just aren't really anything that anybody wants to see, especially if they've put up their indicators, which are supposed to tell them in a kind of orderly way what they should do. In a disorderly world is just a bad combination. But I understand the need or the desire to have a nice dashboard or whatever have you to smooth out this problem. But we can't smooth it out. Bad stuff happens, and it's what you do about it. So what do you do about how do you manage the chaos, and how do you find fortune in erraticness? It's not for like you can't design a car and sell it and say, you got to drive this car. They're like, why? Oh, out of nowhere, it'll do 140, and then it'll do a four-wheel drift, and then it'll turn itself off. And you just never know when that's going to happen. Really, just great car. Oh, man, this thing can corner, and then it can just crash. But that's what the markets can. The markets are just nothing but just a big, ridiculous, dysfunctional situation. Pure dysfunction junction. There's nothing could be more disturbing than the erratic nature of price. So there's no doubt. There's no even the ATRs that people are smoothing out. Oh, I'm running a ATR of 14. I'm running a 100 period moving average and a 20 period exponential moving average. Yeah, that's the ticket. That 20 EMA is telling me that generally we're going up, but there's no way in hell that that's an advantage other than just kind of a rough, like if you got in your car and you said, oh, I'm going to go west, and you just followed the sunset, you could be latitudinally anywhere. If you're not careful, you could be at the North Pole and go, yeah, but I was kind of going west. So I don't know if that really would, it's kind of like that. The market can go up in such a choppy manner that literally you could say, oh, I guess I'm at my destination, but holy God, we've swung up and down 300 pips, and I'm up 100 pips on this trade. If you don't take advantage of the 300 pip swings, you should be able to trade a stupid system and then realize that, oh, you got to have like 10. You got to have at least, 3 10 approaches, and you got to be just a full service. You have to be this, just like the, musician has a ballad, and then they have some, they try to write something that's high energy. It just sounds stupid. Usually ballads sound great because you can stretch out, you can think about the next note coming. But, yeah, it's a lot of fun trading. Yeah, I don't know. It's constant learning to adapt. And, of course, not can't take it personally. So there's another thing, a sensitivity level may be a problem. So the betrayal of the market not doing what the setups, and then people talk about setups, which is kind of a setup for failure in a way, because there's the outcome of a setup. A setup doesn't necessarily guarantee the outcome. And having dual setups running in your head and say, this is a setup for failure, this is a setup for a continuation. The setup for the reversal is already there. You're not waiting for the setup. You just place the limits out there. Setup kind of denotes that you're waiting for everything to come to a certain area. Everything, all the stars align, and you get into some trade. To me, that's a setup. But you don't need to wait for that stupid shit, because you could just throw limits out there. When I say throw them, preferably, what you can afford to risk in a swing trade, and precise areas where there will be a liquidity fill. and have scalps there and maybe some longer term stuff, 5, 10, 8, 4, every so many pips apart. And that's where the work would be, just laying that in. And that totally works. And it works if you work it, right? AA. Go to AA meetings. So that's really the holy grail, is to have that foresight and say, those zones above and below me will always be good trades. The question is, what would the ratios be? And if I'm too greedy on the ratios, I'm going to get kicked out. And how can I spread those through this range? And of course, you have to have some view of the ATR of the weekly, the top and bottom of the weekly wicks. If that's your, especially when the news comes out, big news is coming out, you can crush into those zones and then come ripping back out for the reversals. And you can lay a hole. And I've done these trades, real money, fake money. I've done huge matrices of orders out there. I never drilled down to the forensics and figured out, well, this thing really worked good, let's do that again. I just can see, yeah, I probably only up 20% because I got kicked out of some orders. But next time I do it, I'll say, we have to fine-tune it. So you're always fine-tuning this stuff. You don't just say, well, I'm a fucking guru, I trade like this. No, you're always trying to, like McDonald's can't survive unless they come up with new bullshit on the menu. They can't just have the same fucking menu. People are just going to be like, yeah, okay. They have ridiculous stuff. It always has to be like Mick, right? McFuck something. It has to be, McPip. If you put a Mickey, then they start calling Mickey D's, which I thought was pretty queer. Mickey D? That's a clown. Do they have a clown mascot? Ronald McDonald, the fucking clown. I mean, I don't know. There's something wrong with McDonald's there. Golden Arches? I'm going to heaven when I eat this shit? I don't get this whole... I never understood it when I was a kid. It's kind of creeped out. And they would say how many billions sold. I'm like, you mean I'm just a fucking number? That's what Bob Seger, I'm just a number. I'm not a number. I'm going to McDonald's. And they were counting up the billions sold, and you felt like you were contributing to this bill. I don't know if they still put this on 30 billion sold. 40 billion airdropped on starving kids. No pickle. I always said no pickle when I go to McDonald's, because I was eating one of their burgers once, and I came across the pickle, and I was like, that's an odd, squishy, crunchy surprise. I just say no to pickles, but yeah, geez, I don't know, man. So, but yeah, it's a lot of learning stuff and constantly experimenting. But you always know when you're wrong, because you're losing money, right? I like that people say, you put your stop. It's my funniest thing I've ever heard. Put your stop at a place that you know you'll be wrong about the trade. I'm like, fuck, I'm wrong about the trade already. You mean I got to put a stop in there? So if I'm wrong about the trade at that stop, I thought to myself, well, maybe that's the place to get in. How do I know? How do I know when I'm wrong about it? No, that's a bullshit line. What that means is, how do I know I can't afford to be in this trade? Like, you set your stop at a place that you know you'd be wrong. No, you set your stop at a place that you don't have to add to your account because you didn't blow it up. Because if, so my tequila buddy, about 7 years ago when we started trading, 8 years ago, started trading forex, he said to me, and I don't think he's wrong, but he said, well, if I didn't have to put a stop in, he says if there was enough money in the account, he kept saying, if there's enough money in the account, you can make it all back. So you're buying into some plunge, right? And I think he's right. If you had just ungodly amounts of money, at some point the market would turn around. It doesn't always do that. And he was in so big, of course, right? But that's a funny thing to think about, that if you had enough money, you could survive that move. Just astounding logic. In part true, right? And we've all seen trades that the market moved further. If you're swing trading and you think, God, it's even a better trade at this price, that's not a bad thing. Martingale, it's not a bad thing, because if you load into it, if you buy a losing trade, which you have to do because you already lost on the first buy, the moment you buy, you're a loser because you're down the spread. So adding to a loser, you have to add to a loser because you are a loser. I think that term comes from people that trade giant positions on one ticket. Yeah, they're already fucking broke. You can't add to that. At what point are you wrong about that trade as a joke? When can you just say, I can't afford to add to this, or even be in this trade. I can't afford it. It's not at what point you know you'd be wrong. Because if that was true, wouldn't you just put your orders at those places? And if that's where you'd be wrong, why aren't you getting in there? Why aren't you putting a hedge on and getting out on one of the legs over there? I'm just saying, this stuff doesn't make sense when you think of it on surface. I realize, I think the reason on surface it appears to be correct is because it's taken with the mindset that you're trading in a monolithic trade system. You just trade one size, and you have this approach that you've put so many indicators on to try to tame the erratic nature. I think they do that with kids, right? And they're like, oh, my kid's like a fuck up. So I know what I'll do. I'll put him on Ritalin. That'll fix it. So it's a take pill society. It's a put an indicator on society. Take a pill, right? You don't feel good? Take a pill. I feel better. Thanks. Get a bottle of wine. That's my answer. Get a bottle of wine. And oh, look, the yen's pulling back finally. Dollar yen. But I guess I kind of got carried away in this video. But it's a bottomless pit of things, and it really comes down to how you could fit it into your lifestyle if you're trying to become make more money from trading than you make from your day job or your previous day job. That's the hardest part, because that number, and this is another thing that happens if you're making more money trading than you're making your day job, there's a tendency to quit your day job, or maybe your goal is to quit your day job, so you're forcing trades to get the fuck out of your terrible day job. And the forcing the trade is just like overtrading, and it has nothing to do whether or not you are good at so-called calling the market, because we'll all be right in the end. If you said, oh, I think it's going up, but it goes down before it goes up, and then it finally goes up, you could say, see, I was right. But you would never be able to ride that move if you had wrong stop distance and wrong size per ticket. So that's the struggle. A lot of people, the internet's there now for people to look at stuff and go, well, look at this guy's doing. I mean, I could do that. And you probably could, maybe I'm overthinking it. But I had to go through all the stripping away all the shoulds and all the mottos and all the myths and creeds that people kind of chant. All the books you read. It looks good on paper. And these are the right things to do, but they really almost don't apply to the market. I mean, disciplined trader, what does that really mean? Right, if you're martial artist, disciplined martial arts, well, you're at the mercy of the guy you're fighting. I guess you could rehearse your kata, you could do your movements and rehearse that. But when the market's an opponent, it's coming after you, You really have to, like, I think of the buy limits as being like a keto, where you just basically, or stops is like stop entry, flow is just a keto, where you just go with the way the market's going. And when the market runs out of energy, that hesitation there, just being agile to get in and out of these markets. And the big picture just wouldn't mean shit. The bigger you get in, the less the big picture means, because you're shitting your pants about every pip it moves. You'd have to be. I just can't imagine. But maybe people do. Maybe people, you have to be underwater by $1 million to make $3 million. You have to find yourself underwater by $10,000 maybe to make $30,000. And maybe underwater on that one ticket, or you lost 10 grand last month, and then the other month you made 30 grand. If you lost 10 grand in 1 month, a lot of people would be like, what? And you think you're good at this? Well, okay. Maybe you did overtrade. You'd have to really be honest with yourself and say, find out what the problem is. But you could dial that in and correct that. I don't think anybody's done learning stuff. Some guy was teasing me about trading a demo, and I said, well, gosh, I mean, I don't even, what do you mean, everything for you is real money? Like, you're so fucking, you're not growing, you're not learning, you're done? And there's a bunch of brokers out there. Each broker has his own unique qualifiers for what they're best at, really what they're good for, and I just don't think it's as cut and dried as people want to make it with. Well, you're going to look for this pattern and you can do this trade, because it's so more complicated than that. Because it's really about the price swings. You're never going to realize that target if you psychologically can't handle all the swings on the way to that target, and maybe you at some point realize that it's okay to trade the zigzags on the way to the target and not be involved in the whole ride. Right there is a huge difference between the guy that's making money trading every zigzag and the guy that's buying and holding and just saying, I waited, I made the same, made about the same maybe money as you, but the whole time you're holding that trade psychologically, if you do see that you're like, wow, I could have got out here, I could get back in, that's a skill. That's a skill of pain management, if it bothers you. And I don't see how it wouldn't bother kind of most people. If I said to you that you've got 5 cars in your garage and every now and then I'm going to steal 3 and bring them back, and I'm not going to tell you when, I think you'd be like, geez, are you going to bring them back? Well, I mean, I might. Oh, gee, this is kind of an odd relationship. So it's really brutal in that sense. I just don't know if there's any way to train in that. There must be training you can do other than trading the market with real money, but I think you might as well just go to the source of the problem and just trade and just get callous to risk. I mean, not to the point where you're just, drinking bottles of wine and just, over trading. And under trading too, I mean, if you're just like so careful. When I started trading, I couldn't even trade because it was so expensive to trade, and I thought, I better fucking be right. I don't want to just, and I was actually I had to call the broker, and I thought, the broker's going to think I'm a fucking moron if I tell him this trade. And I had a broker tell me, he goes, really? You want to do that trade? I go, yeah, absolutely. It was a winning trade. And it took a lot of guts to this is in like 1983. It took a lot of guts to, tell the guy, listen, give me 2. You don't like it? I got an attitude with this guy. I'm buying 2, I'm not just buying 1. This one's up. He said, well, our research department says that you know, the crop's going to be bad, the soybean meal. So, and your point is, like, the crop's going to be bad. I go, your research department sucks dick. I figured that out right off the bat, right? Now, the hard guys in the research department, I mean, the real one, or if there was just people saying, hey, let's just guess and then tell our clients, this is Jack Carl Futures. I think everybody's bankrupt. I think Refco bought them, and then Refco got sued. But, you know, if you can argue with the broker about the trade, this is the broker's, it's $43 round trip plus exchange fees. And you think, well, they got a research department, right? What do I know? I don't have a CAT scan machine. Maybe I do have a brain tumor. That's why I'm angry. So I just went with it. But we all have that. We all have that thing. Well, maybe somebody handhold me, get me through this thing. And then, of course, there's that point at which maybe you give up because you're just like, wow, Jesus. I'm intimidated by the market. My broker's intimidating me. But when MT4 came along with forex, there's no more intimidation of having to deal with a human being. Even though you may feel like, well, the broker's going to think I'm an idiot if I put this trade on. And that might be something right there that just prevents people just feel uncomfortable. It's awkward. But yeah, it's a weird way to make money, I must say. Okay, so I've tortured you for an hour and 53 minutes.